Hi, and welcome to episode 13 of the Just Covered podcast, when we listen to advisors' views and opinions on the intermediary space.
And today we're joined by Wayne Griffiths from One Financial Solutions. Wayne is an absolute beacon of knowledge when it comes to the financial services industry as an independent financial advisor and director. So, Wayne, thank you for joining us. Could you tell us a little bit about your journey to becoming an independent financial advisor?
Wow, what an intro. How am I going to live up to that? Like a lot of people, 1990s, I started in financial services, worked for a direct sales force company back in 93, had 2 years working for insurance companies. Then I joined the Great Midland Bank, as it was, which became HSBC. I was very lucky to work under some really good bosses there. People like Mark Hussain, who's now CEO of HSBC Life, and Mike Morrow, who's CCO at Parmenion. And I had 17 brilliant years there. Loved it. It was fantastic. Started with personal advice, moved into business financial planning, and then corporate towards the end. And then 2012 happened with RDR, and I think it's fair to say that HSBC weren't necessarily set up properly for RDR. So made the decision to set up One Financial Solutions, become independent, and really, really scary times. Really scary. HSBC had an amazing compliance department. So I was very, very secure in everything we did. And all of a sudden you're sitting there going, I've got my own business. Well, what do I do? I'm very fortunate that I took the decision to join a network, Two Plan Wealth Management. They've supported us fantastically for 11 years. And we've grown from one advisor to 22 advisors. And over the next 6 months, hopefully in excess of 30. So the last 11 years have been really exciting.
Yeah, what a journey, and what a difference between going from, as you said, that kind of protected space where all your compliance and everything's sorted, and taking that leap of faith to think, I'm going to go it alone. What have you found the main difference between being a restricted advisor to being now an independent advisor?
Well, I think the thing is I couldn't have gone directly authorised. There was no way I could have done that. So the help of having a network with their compliance was essential. I think the other thing that's really, really important to understand is this whole restricted versus IFA. The industry is tearing itself apart about it. It's the thing that I talk about all the time. Everyone wants to seem to have a one-upmanship over IFA equals good, restricted equals bad. I know some amazing restricted advisors and I know some god-awful IFAs. So it doesn't mean IFA is good, restricted is bad. I think from my point of view, we need to focus on being good advisors. We need to focus on why we got into the business. And for me, I can't be the IFA I am today if it wasn't for the 17 years of restricted advice that I had. I think the most important thing is that it's learning those soft skills. It's learning about being with clients. It's learning about your processes, learning about fact find, listening. Those things are really, really important. When you're in the wealth space, when you're restricted, I think it's really important because you're spending 80% of your time with the client. And because you've got a smaller panel of product providers, you can spend 20% of your time actually looking at the companies you're going to research and what you're going to recommend. When you become an IFA, it flips on the other side. You're spending less time with clients, which I hated, and more time doing the product research. So those years of just sat in front of clients all the time and spending time in front of clients is essential. So I think that for me, the restricted side of it was really, really important for me, really, really important. And when you talk about on the protection side of things, most people I come across in the restricted side of protection nearly have a whole of market panel anyway. So it's not so different on protection.
Mm. And when you were kind of setting up your business then and starting that journey, where does protection fit for you in the wealth space?
It's in every conversation you have. You know, we sit with clients all the time and they might be talking about other things. Okay. Now, a true financial advisor for me is someone who's really nosy. I'm probably the most nosiest person in the world. I love sitting with people, telling stories, hearing their stories, finding out why they have things, why they took something out, what the purpose was. So being nosy is really, really important. You sit with someone and they find out they've got a life insurance policy or they've got an investment. Why did they take it? What was the purpose of it? Finding out all of that. So sometimes advisors go in saying this client is an investment client and they won't talk about protection. For me, it's about being nosy. Just what have you got? Why have you got it? Let's talk about it.
And not being blinkered, I presume.
Yeah, it's really, really important. We all fall into the trap. I'm not saying I don't. We all fall into periods where if you're busy or anything like that, you might walk into an appointment thinking it's going to turn out one way. But I think the more, keep going on about it, the more nosy, the more inquisitive you are with every person sat in front of you, the more you'll actually find out what's important to them, what do they want to talk about, what things they take out. It's essential because wealth clients need protection, I have this conversation with mortgage advisors all the time. Quite often mortgage advisors come to me and they'll say, oh, my client's got a portfolio of buy-to-lets, they don't need protection. You'll sit there and say, well, if they've got a portfolio of buy-to-lets are worth a load of money, they might have an inheritance tax problem. So why aren't you talking about the protection for the inheritance tax problem? Don't just go in and think that before the meeting, this is how it's going to go. Yeah. Just go in with an open mind and just chat.
Absolutely.
So in terms of that open mind as well, going back to, there's a lot of advisors out there that started in bancassurance, so HSBC, all the others that were out there at the time. What good habits have you taken from that grounding that you've had that then helped you now when you went out on your own 2012 plan?
I think there's something that's core to a good financial advisor. The core things that most good financial advisors have is that they join the industry because they want to help. They want to help others and they're nosy. Keep going on about it. But, I sit in a meeting and I want to know stories. I want to know football teams. I want to know why they bought that chandelier. I want to know loads of different things about someone. And that's really, really important. So good habits are just sitting with the person and just wanting to find out what's really, really important.
Because you had that ability to sit with so many customers in that scenario. When presumably you were covering branches, sitting in branches, is that right?
Yeah. So back then, I was actually brought in because I remember the recruitment agent was saying to me, you're really good in front of clients, but you're terrible at booking appointments. They got loads of appointments, but they got loads of terrible people who can't be in front of clients. And I was like, marriage made in heaven. So went in and we were having like 15 appointments a week. And you learn very, very quickly. But also you do need people to mentor you, to explain to you, because there's a common thing that happens with good financial advisors. When they find something that works really well, they stop doing it. And you need people to sometimes sit and watch you in a meeting to go, really like what you said. And you need to watch other people in meetings. I've sat with some junior financial advisors and stolen the thing that they've said because it's fantastic. So I think at HSBC, because I had a salary, there was obviously targets. Terrible word back then, but there were things that we had to achieve. Deep down, we were given time to actually find our feet, become good advisors, and you will find that if you do things right for the client, the rest looks after itself.
And that element of having mentors, having people helping you, you say stealing things from people which they use. An old colleague of mine said we're all magpies in this game. And that's one of the reasons we've got this podcast, in that we're sharing all those good things that advisors like yourself do. So sort of taking it back to, you mentioned that mindset, and we talked about the belief cycle in the previous podcast about having that belief that all customers have needs and all that type of thing. So when you're looking at, say, a buy-to-let client or a client with a buy-to-let portfolio, some advisors will be thinking, oh, they don't need protection cover for that. How do you approach that? How do you approach a particular, say, for the first time, I'm a client coming in, I've got that. How does that work?
Well, I think the thing is finding out what you want to achieve. Is your buy-to-let because you've got a large family and one day you want to make sure that they have a better start to life than you ever had? Now, if that's the case, then if you've got a £5 million buy-to-let with £1 million, commercial mortgage on it or buy-to-lets on there, are you happy that they're walking away with 4 million? Do you want them to walk away with 5 million? What's really important to you? Is inheritance tax important to you?
You're drawing out their goals, aren't you?
Yeah, totally. Goals, aspirations.
Yep.
They seem really flippant words because they're used in lots of sales technique, but it's true. Nosy. Why are people doing what they do? What's important to them?
One of the best sales managers I ever had when I was a trainee advisor, that's exactly what he said. He goes, you're not a mortgage advisor, you're a nicely nosy person now. That's literally how we were trained. They were like, and we just used to spend like days in the room practicing just being as nosy as possible with each other, because then he genuinely felt that that made you the absolute best advisor you could be. And you definitely walk the walk, because one of the first questions Wayne asked me when we had our intro call was, what football shirts are in the background of your study? So it's definitely true.
Definitely. I think we all have memories of sort of like old managers that look after us and things. You know, I had 28 years ago. There was I think he was the head of sales at HSBC Life or Midland, was a guy called Simon Donahoe, and he was known as you get in a lift with him, and he used to say to you greetings, and he'd follow up with, if you don't sell it to your mum, don't sell it to a client. Now, sales is a bad word; it's advised now, but the truth is still the case. You know, I talk about my dad in nearly every appointment I go to. My dad doesn't know this, but you know, it's things like equity release. You know, we were doing equity release because I've sold it to family, friends, you know, loads of different things like that. And I sit there and I say, I think that it's really important that you are comfortable with what you're advising on. And if you are comfortable, then you talk about that with friends and family and things like that. If you're not comfortable with that, then it might not be the right thing to actually talk to clients about.
And that's a massively growing trend, isn't it? That equity release space. And
Huge.
it's huge. I mean, we recently at Legal and General did Bank of Family research. And in that research, we found 47% of people who are purchasing their home for the first time get support from their friends, family, relatives, you know, those kind of aged under 55, need that help to get on the ladder. So again, when we think about that buy-to-let space, a lot of advisors say to us, I can't sell protection in the buy-to-let space. We're beginning to now see the same with equity release and that trend. What are your thoughts?
I think the bank of mum and dad or bank of grandparents is that's a trend that we've seen, but it's going to get bigger and bigger and bigger. It's something that when you become parents or grandparents that you want to look after your family. And the most common thing that I hear all the time is people saying to me, I don't want my family to wait until I die to benefit from my money. But the only money they've got is bricks and mortar. So when they hear about things like lifetime mortgages, which, you know, it's tough at the moment because the rates are high, but go back 2 years ago, the rates were fantastic, you know, sub 3% for some lifetime mortgages. And I think it's really, really important because we get into this job because we want to see people, help them retire. We want to see them become more affluent. We want to get them on their first home. And there's that warm, fuzzy feeling when you do something nice for a client. And to be able to help people that are really struggling for income and they've got this house to actually be able to live, to able to help then remortgage, to actually go and give money to grandparents or sorry to grandkids or kids to enable them to go and buy their first property. You're sitting with the whole family and it's just lovely. It's just really, really nice. It's a real difficult marketplace to be in because you're now talking to a generation where the whole thing was take a 25-year mortgage, pay it off. Don't have a debt. Get your paper title deeds. A mortgage, you know, for them now, I've paid it off 20 years ago. Why would I take another mortgage? So they then start talking about, I don't want the mortgage because I don't want to leave a debt to my family. But they can't get their heads around that they've already given them.
Isn't it?
Yeah, they've already given them the money.
Yeah.
So that's where protection comes in. If you're going to take the debt and they're able to take some insurance, then take the insurance alongside the debt. And they're still giving the money away, but they're not leaving a debt with the property. So
It's a win-win.
why would you not at least talk to them about
You're
it?
taking that uncomfortable feeling away because they've been sort of, in a way, learn the fact that you have that mortgage for like 25 years, you then pay it off. You're feeling uncomfortable about getting a debt again. You've then got a solution to take that uncomfortable feeling away whilst providing that affluence that they need, and the ability to share.
Yeah,
their wealth.
we never ever do any equity release advice without the families being involved. Now, that's not a sales tactic to now get intergenerational planning. Okay. It's all about that actually a lot of the time you've got mum and dad sitting there who have got a house falling around their ears, is like falling down. Okay. And they're literally living on nothing. And if you get the children involved, the children will actually sit there and go, Mum, Dad, can't do this anymore. And the parents are like, no, I want you to have the money. You've got to have the money, and the kids need to be involved because they don't want their mum and dad living in that sort of situation. So they're sitting there going, we need to do something about this. Now, That's really important. Now, if then they say, well, they don't want to have a roll up option or they want to have the mortgage paid off, then we can talk about life cover. But it's really important that everyone's involved from day one. But I think life cover is, for me, it's intrinsic. It's, it's so important to talk about with exit release clients.
And what about those clients who opt to make payments? Obviously, now it's getting more and more popular as well that equity release, they want to then start making optional or contractual payments towards that. So again, protection absolutely fits into that space, doesn't it?
Totally. Yeah. It's clients will either roll up interest, they'll have they'll make payments, they might even actually make overpayments. And if the ability is taken away to do that, then they become quite concerned. So the protection side of it's, really, really important, even to the point of things like, we're in an era where a lot of retired people have got final salary pension schemes, and you'll have an unequal wealth balance. So you've got, someone who's got a very nice income from a final salary pension scheme and a state pension, and someone's only got a state pension. And that final salary pension scheme might only pay a 50% widow's pension or might only pay a 50% dependent's pension. Now, how's the person going to live if they've lost half that income? And that's where you start talking about fibs. Fibs are ideal for scenarios like that because, they're the Ronsil of the protection world. They do what it says on the tin. You can set something like that up for them. And it's really, really important because they can then carry on making the mortgage payments. Don't have to pay it off.
And that's the thing, family income benefits so undersold because people are like, oh, it's for families. It's not. It's for anybody who'd be left behind that would struggle to maintain that lifestyle, isn't it? And that's where it fits beautifully into that equity release space.
Yeah, family income benefit, I think, has become it's become an issue because if you go over the last 30 years of me doing this, we constantly shoot ourselves in the foot by overcomplicating things. We go through an era of it was capital repayment mortgage, decreasing term insurance, simple. All of a sudden, people are selling level term insurance to build in some family protection. And you're like, why don't you just go and recommend 2 fibs alongside decreasing term insurance? And make sure you're right with the trust policies and things like that. Family income benefit, it just literally is so easy because you have clients who go, well, okay, if I want £1,000 a month, if something happens to, one of the parties, you then got to use some online calculator to work out what does £1,000 a month need to be as a lump sum payment from a level term insurance policy, assuming inflation at this, assuming growth rate at that. And let's face it, inflation hasn't done what we want and growth rates haven't done what we want. So you work all that out. Well, why don't you just go and sell a family income benefit that just says it's going to pay out £1,000 a month for this term?
Yeah, you haven't got all that complication.
No. And you look at it and how many clients years later pick up their obviously legal and general policy document, and they look at it and they go, what did I do that for? It's £100,000, £200,000. They have no idea what that meant to the income they needed. You pick up a family income benefit schedule and it's like pays £1,500 a month for X amount of period of time. It just straight away triggers why they took it out.
Then matches their lifestyle, doesn't
Totally.
it? And that's what people care about. It's that lifestyle piece, isn't it? And that goal-based planning, solutions-based, because that's what I'm loving about this conversation is protection isn't always doom and gloom. It's actually about putting a solution in place that's going to benefit and empower you if you're in a tricky situation.
Yeah. Protection for me, the downside to protection or the difficult side to protection is claims. What we do for a living is, if I could from now on only have the nice things, which is someone retiring and you're telling them that they have enough money to retire, buying their first home, those sort of things. That's all lovely, fuzzy, wonderful things. Claims is really, really difficult because claims it reassures you that you did the right thing and it makes you go out and have more conversations. But it's like car insurance. You take it and you hope you're never going to claim on it. I've been fortunate, unfortunate, whatever way you look at it. In 30 years, I've had 17 critical illness claims. And I've only had 4 death claims. And the first one of those was 6 years ago, and that was my closest friend.
Sorry to hear that.
Things like that make you go, it's important to talk about it. And I'm not saying if you've never had a claim, you're not the same advisor. But all I can say is talk to people who've had claims, look at claim statistics, because you're not just selling something for commission that was never going to pay out. This is going to change someone's life. And it's going to be really, really important that you sit with that person. And it's not about taking that money to invest it. It's just you done something good. And that's what we do.
Yeah, and in order to do that good that you do, you're doing along that pathway. You're doing something good in that you're getting to know your client as much as you can. So all those types of things you were talking about earlier, where you probably know about their kids, you know where they're going to school, you know where the next house is going to be, you know why they're going to buy it, you know what their potential, if you like, modifications they might make to that house. They know, you know where they want to go in the future. You're finding all of this crucial information out, aren't you? So you can then later on the line find out how they feel about it and the importance of having it, and then providing a solution for them not losing it.
Yeah. Storytelling is what we do.
Yeah.
Okay. Many years ago, I've told this story thousands and thousands of times. Many years ago, I had 2 appointments one evening. The first appointment, I went to see a client of mine, existing client of mine, lovely guy, and he'd done jousting for a living, and he was the Black Knight doing jousting. It was fantastic. It was absolutely amazing. And I was talking to him about horses, and this how long ago it was. He bought a load of horses from the film First Night with Richard Gere. You click your fingers and this horse would roll over and things like that. Anyway, I actually went to see him to put the family income benefit in trust. Honest truth. The following appointment, the next one, I walked in and having the appointment and talking to the husband. Wife walks in with a little girl. She must have been like 7 years old in a riding outfit. And for me, I was able to literally turn around and say, "Oh, where have you been?" She's about to see my horses. And I was like, "How?" And I knew nothing about horses till 2 hours ago. "How high is your horse?" "Oh, it's this, how many hands?" And I was telling the story about the Black Knight and things. It's about, that wasn't a sales tactic for me to want to actually say to them, buy off of me because I can tell you a great story. It's because I was interested in, I don't know how many hands a little girl's horses and stuff like that, because I'm interested in it. And I've told the story, and I've actually met other people who got horses and they go, "Oh, a horse with 16 hands, that's huge." It's just about being nosy.
You're
You will
being
tell
nosy,
stories.
but you're telling a story at the same time. So you are asking, but you're also telling stories. So you're balancing it in a right way. So I'm interested. What do you think makes a good storyteller?
This is where I think one of my pet subjects, which is about exams versus experience.
Right.
Okay. Exams are fantastic and they can showcase that you've passed them and things like that. But actually, sometimes experience of going through a claim or what you've done for someone else and explaining that to someone new is really, really important, because the client is welcoming you into their home and they don't know you the first time. And you need to get across to them what you're doing, not what's different to other people, that you're better than anyone else. What are you doing for them? What's really, really important? Sometimes storytelling telling to them is about, "I did this for someone else." They go, "Oh, I understand
Well, they
now."
need to buy you, don't they?
Yeah. They need to buy you, but they need to buy the concept of, why are you sitting there in front of them? Because they're going to be, "Well, can you help me? How can you help me?" And sometimes I'm very pictorial, so I might draw things or talk to them, but telling a story to them is essential, because they will pick up on bits in that story that resonate with them.
Yeah. And I think that they say that people make a first impression judgment like 7 seconds, don't they, or something like that. And then I think continually after that, they're galvanizing what that initial thought is. So the scenario with the little girl, for you there, you've got a great first impression. You're being you, basically, are you? And I certainly think that the clients, when they're talking to advisors for the first time and throughout, they're thinking about, okay, what's the competence of this person, but also what's the intent. And in that scenario that you're describing there, you're showing your true intent, which is for the positivity of, for the right reasons, for the client, for myself, all that type of thing. They'll be thinking, but at the same time, you'll probably be weaving in things with clients you've dealt with before. So at the same time, you're demonstrating your competence.
Yeah, you have to remember that I keep talking about these fuzzy things.
Yeah.
Wealth advisors talking about fuzzy things is a lovely thing to talk about. Retirement, paying the school fees, making loads of money, all fantastic. A protection advisor is sitting there saying, I'm concerned if something happens to you, this is going to happen. All the what if scenarios. And I'm hoping this never pays out, but I'm going to take £100 a month off you for the next 25 years. So where you tell stories about claims, about how it's benefited, things like that are really, really important, because otherwise you are sat there selling some insurance that the client doesn't think it's ever going to pay it, or they're hoping it's never going to pay out. So why are they going to buy it from you?
Yeah.
And that storytelling is really important.
It is.
It is. And I think that's why we put so much into our claims videos and things. And we always say to advisors, you're not going to play a claims video to a client, but being able to watch one and say to a client, actually, there was a gentleman, one of our claims videos is my ex-colleague Dave. And there's a gentleman called Dave, actually just lives in Glasgow as well, around the corner. And this is how he used the money, or this is what happened. So I wouldn't want you not to have that option. And that is that connection. And I always say, like, I sadly do have my own claims stories as well, from clients and also family. So it was easy for me. But I always say to advisors, if you've not got your own claims videos, don't just watch one and think, oh, I've ticked that box and I can talk about a claim. Watch a few, so that actually when you're going in to speak to your clients, you've got something that matches that client sat in front of you to build the story that is right for them. Because throwing a claim stat at them or talking about someone in their 50s when your client's 25, that's not going to do it, is it?
No.
You talked about being nosy and stuff, effectively questioning customers. From, again, your experience back in the day, did you use any acronyms or anything like that? Do you remember they used to have those when you're training?
They did.
Anything
They did.
you've retained and you still use?
No, not really. I think most of mine is, honestly, it's just that really being nosy. I walk into someone's house and it's like, I walk in and I'm looking at pictures and I'm looking at
pointing at them.
well, sometimes it'll be things like, I really like that. I want to buy that for my house. Where did you buy it from? Oh, it's from IKEA. Really? I mean, how many IKEA clocks have I seen over the years? I mean, but generally speaking, it is about that, just being inquisitive. Okay. And clients like telling stories generally. They like telling you all about their lives and what's important to them. And this isn't all this broad concept about, build it up and rip it out from underneath them. This is about really caring and sitting there and saying, what if this happens? Okay. And the toughest ones always are, as a dad, you sit there and you go, well, as a parent, okay, that some of the most important things are putting food on the table, putting roof over the heads. Okay. And you're sitting there thinking that this person hasn't got any life cover, but they're struggling to do that. And cost of living is, really, really tough. So some of the nicest cases have been when you've been able to rearrange things, or you've been able to do a new fixed rate on a mortgage, which has freed up income to do protection. And you can actually walk away and think, do you know what? I did a good job there. I actually did a good job. And if anything happens, they're covered. But before I went in, if anything happened, it would have been horrendous. And that's like, I keep going on about it. Advisors generally, everyone you meet, they do this job because they want to help.
Yeah, I think that's the enjoyable bit of the job, isn't it? Because to me, like when I was advising, it was the stories that I loved. Like there's still clients that I can remember from like 10 plus years ago that I spoke to, and I could literally tell you like their kids' names, like what they did for a living, because I genuinely loved the conversation that I had with them. And they were the ones that I'd walk away from and I'd have the protection in place, everything would be great. And it wasn't because my ability was any different. It's because I just found a connection and it worked. And you'd come out those appointments and they'd feel that the time went so quick. And it's such a good feeling, that, isn't it? Good.
My amazing admin team laugh about this, and my clients laugh about it. I'm not great with names. Okay, not great with names.
Wayne, by the way.
Yeah, that helps. I link clients to scenarios. So I will go into the office and I'll say, I'm going to see so-and-so, and they'll be like, do you remember the name? And I'm like, lovely lady gives me cake every time I go. The lady or the husband who, has got a red setter. And so those clients, I walk in, people go, you don't remember a name, but you remember everything about them, the grandkids' names and everything like that. And I'm like, I don't know, it's just me. It's just me because I talk about, as you can tell, I just talk and talk and talk. But I talk about everything with the client.
Oh, I'm not
I
great with
love
names
it.
either. We were just talking about it before, weren't we?
Yeah, it's hard, and when you're seeing so many clients, it is those other memorable things that make them all stick out, isn't it?
Yeah,
Like
Totally.
rather than just being numbers on a page and working through that pension, it's these soft facts that are the bits that
Things
we
that stick in
treasure.
your mind for
Mhm.
when you went to see it and where you were and how you felt at that time in having that conversation will transport you back, and you'll always remember that, won't you?
Yeah.
That particular individual.
Yeah. Oh, that's
Yeah.
been amazing. There's been
All right.
so many lovely bits of conversations. It's been great getting to know you today, Wayne, and really finding out about that. Actually, that storytelling element, because as you said, it isn't a sales thing. You know, we talk about storytelling as a sales technique. It's actually just should be because you enjoy your job. You want to get to know people.
Totally. Yep.
What would you say is the one bit of advice that you would give to other advisors in the industry?
So I'm going to go completely off script here. Okay. So the one piece of advice, there's someone in the room here that I have a lot of respect for, Sam. And Sam does this thing where he messages me and he asks me out of 10, how am I feeling? Okay. Mental health is not something that advisors and admin and para planners and that we would talk enough about. Our job is so hard, so lonely. And also sometimes you carry the burden, the weight of all those expectations of those clients. He has a knack of texting me in the days when I'm 0 to 5 rather than 5 to 10. And all I think a top tip would be for everyone just to always message other people and just simply ask them on a day how they're feeling out of 10 and not be afraid of other people messaging them and asking how they feel out of 10. And I think our industry's tough, really tough at the moment. And I just think it's really, really important. So as a top tip, it's just not about doing more. It's just about, caring about others and looking after others.
Completely. We had really similar conversations with Sam before you arrived today and said the same thing, that there's been so much going on in the last 18 months in financial services, and it has been a hard and stressful time, and actually collaboration, not competition, isn't it? That makes our industry grow, and also it's just nice to be nice,
I
isn't
think
it?
he's
It
got a
feels
camera
good.
in my
But
car and he can see when I'm sitting, and I'm really struggling. It's like, how are you feeling today, Wayne? I'm like, oh, great, Sam. What's the score? 2. Okay. So it's if what we do for a living is we care about others. We don't do enough about caring within our own organisations and our own industry, and it's tough.
I think you're right. We're in it together, and thanks for sharing that.
yeah.
In the fact that some days we're not having a great time, and other days we're fine, and we should be checking in with each other because it is tough out there, and we're all in this game together.
Totally.
Thank you so much, Wayne. I
Yeah.
really
thanks for
Thank you,
having
appreciate
me.
Wayne.
it.
That's been a
It was
brilliant
amazing.
episode. And we didn't manage to mention Britney Spears, but maybe next time.
Definitely next time.
Thanks a lot.
Thanks, Wayne.